begin with a big bounce for the banks. The financials leading today's charge, rallying more than 2.5%. And check out this move in Wells Fargo. The stock climbing nearly 7% today on reports that Goldman Sachs is considering acquiring the bank. Now, we don't normally talk about rumors or speculation, except when the stock moves on it, and it did. So, Tim, what's your take on the action in Wells Fargo? What's your take on a possible M&A deal?
Well, this kind of news, first of all, this rumor was out a couple days ago in the market, and certainly market participants didn't do anything with this news yesterday because we talked about the down move. This deal makes a lot of sense if you think about the environment, especially the environment over the last couple of years for both of these players. I think this deal would be a ridiculously difficult deal, even if we're just going hypotheticals, to get through on the regulatory side. So I don't think either one of these have a lot of friends in Washington. I do think, and again, this is not me saying that. This is just my sense of where this would be. But look, I don't think this deal is going to happen. I do think that Goldman has continued to build out kind of their retail platform in Marcus. I think Wells Fargo has a lot of issues that I'm not sure Goldman would even want. Anything at the right price, and obviously the move we've seen. But this snapback today, I think, is more in line with the banks. I think this news has been out there, and you could have heard this news a year ago.
11% low in shares of Wells Fargo in general, aside from today's move, Karen. But when it comes to regulatory issues, Tim's right. I mean, not only do they face regulatory issues in terms of the ethical violations that ethical problems that they've had in the past couple of years, but they've also got 10%, I think more than 10% of the market share for deposits already, which makes it a very large player.
Yeah.
Right. I don't know how much Goldman's deposit share must be much lower than that. But I'm pretty dismissive of this deal. I mean, both stocks you can't do a cash deal this big, right? Wells Fargo is significantly bigger. I think the market cap, which is $98 billion and is at a, more than a decade low, is significantly bigger than Goldman Sachs market cap. They would have to do stock. They're both trading at well below tangible book. It's hard for me to have Wells Fargo board think, you know what, now's the time for us to sell. That just doesn't make sense to me. But I get what Tim's saying is right. I mean, Goldman Sachs wants to sort of remake their business and have more of a commercial bank franchise than they do. But this I find really far-fetched. I think it was just, this has been the worst performer of the banks. Mm-hmm. So maybe, if we're in a bank rally, it certainly has the most room to the upside.
There's also a lot of concern that some of these banks may be forced to cut their dividend. Wells Fargo was named as the #1 most likely candidate by KBW in a recent note because they have one of the highest payout ratios. Right now, I believe as of the close, it was north of 8%, Adami. They've got a few other regionals on that list, Citizens Financial, as well as others. But you can see there, Wells Fargo, head and shoulders above the rest. Citi right now is 4.9%. A lot of the regionals have 7%, 6% dividend yields, by the way.
Yeah, and so I'm not splitting the atom here, but the reason for that is because of the huge move to the downside in the stock. So the only way to remedy that is obviously for the stock to go higher, and that takes care of itself. I mean, I don't necessarily want to go down this Wells Fargo, Goldman Sachs rabbit hole. I mean, the last huge acquisition Goldman did was 18 or so years ago when they bought Spear Leads, and quite frankly, respectfully, that didn't work out all that well. With that said, the way to trade it, and Tuesday we talked about bookmarking things. Well, it's another bookmark day, but specifically for the banks. And I think finally the banks have given you something to trade against. And good for Dan, Nathan, and Carter for being negative. But today's one of those reversal days that you have to take a hard look at. And to me, for the first time in a while, Goldman Sachs against $82, which was basically today's low, makes a good risk-reward trade going into the next couple of weeks.
You agree, Grasso?
Yeah, I've been negative on the XLF. I think Carter got that right as far as looking at some chart work there. And this seems to me a little bit of hope for pie in the sky, considering Wells Fargo was at the center of the government's target and bullseye. Past practices, still a big problem for Wells Fargo. I think people are just using this as a way of getting out of their longs. I don't believe the story, and even if the story is correct, there's nothing really resolved on credit losses. Let's remember where rates are. Zero. Let's remember where they're going, probably negative. So I think the tough sell is on value right now, and specifically in the financial space, value has been what's been thrown out. It cannot perform for longer than a handful of days. So maybe you get a couple more days off the bottom in Wells Fargo, but I would sell it.
And we were just talking about that value versus growth, Tim. And today seems to be a reversal of the trend that we have seen of late, which is growth triumphing. Today, value did nicely.
Well, again, we had to get some kind of a bounce, and if you one of the multiples I brought up a couple days ago, the divergence between PE multiples on a forward basis of growth versus value, 25 times forward versus about 16 times on value. At some point, I think you have to see some convergence. But the bounce in the banks today, and I'm not as negative as Dan and Carter have been, but good for those guys. I think you get to a place here. You know, this, like, for example, look at PNC and look at them selling their BlackRock stake. Look at their Tier 1 capital at this point. It's 10.6, 10.7%. Some of these banks can be very opportunistic in here. I think, and if you look at the performance of the banks as a sector, they're down about 12.5% since the group reported earnings on April 13th through 16th and started that with JP Morgan. You know, that's because these banks, and maybe rightly so, throw huge provisions out there. Some of these banks are going to be armed with balance sheet, and I'm not saying that the environment changes overnight, but some of these banks are being painted with a brush. It is a good time for stock picking.